Hey, how's it going, everybody? This is Nick with the EB Group. Wondering, did you skip some of your mortgage payments last year? I'm going to tell you right now what that means for your tax implications. So in March of last year, as we all know, we got hit by the pandemic, COVID-19. This cost a lot of Americans their jobs, income, things like that. And what this had an effect on was their mortgage payments. But what they were allowed to do is go into forbearance. And a lot of Americans at this point, we could see that more than 4 million Americans reached a forbearance peak at the end of last year. But nowadays we're down to 2.7 million borrowers who are still in forbearance. Now originally they were allowed up to 12 months of forbearance, which has recently been extended to 15 months of forbearance. So mortgage forbearance is actually not a new concept. It's been around for a while, and it's commonly used like during natural disasters or in the wake of some kind of disaster, which is causing a lot of homeowners to require some help. Usually forbearance requests are fairly isolated incidents like what occurred during COVID-19. So how does forbearance affect your ability to deduct interest? Well, usually individuals typically use what's called a cash basis method, and what that means is that you report income when you receive income, whereas businesses, on the other hand, they'll report income when they provide a service, whether it's been paid for or not. Now, on the flip side, that kind of goes for the same with tax deduction. So in other words, you can deduct on your mortgage if you paid interest on the mortgage. So borrowers in this position need to look out for a form called a 1098. This is a form that the mortgage company provided to their borrowers for tax purposes. And the document will list how much they paid in interest for the previous year, which they can use to calculate whether they should take any kind of deduction. Now obviously in many cases borrowers, you and me, we entered into forbearance as a precautionary measure, but we continued making monthly payments. These kind of individuals should really pay close attention to the 1098 form because you need to ensure that the amount listed is absolutely accurate. If it's not, you can go ahead and just report any kind of inaccuracies to the IRS, so you can tell them what you think it should be. Ultimately though, borrowers who requested to go into forbearance most likely paid less on their mortgage anyway. So those exiting forbearance are generally going to have a few options to repay the debt they owe. One option is paying in a lump sum afterwards, or come up with a payment plan that you could pay off towards the end of the loan. Now borrowers in severe stress may be able to modify their loans a bit. Again, that's something that we can help you with, loan modifications. Now what this does, again, you can adjust the interest rate or some other factors of your loan to make your monthly payments a little bit more doable for you. Some borrowers might even find themselves in a situation where they have some of their debt forgiven. So let's say you go into forbearance and let's say you can't pay it back. Well, you can get into some adjustment of the note, and that's when you can have a cancellation of debt income. And now canceled debt can be taxable, and when it is, it's sometimes taxed like ordinary income. And so the Mortgage Debt Relief Act of 2007 states that it excludes any discharged debt up to $2 million for any people's primary residence. And as a result, most homeowners won't need to worry about taxes on the forgiven debt. If for some reason they do, they will receive a Form 1099-C from their lender, and that's going to display the amount of canceled debt, which is then added to the borrower's gross income when they report their taxes. And if a homeowner ultimately loses their home to foreclosure or sells their home to the lender down the road, the situation is considered a sale for tax purposes, and capital gains or losses may apply, but borrowers in this scenario shouldn't worry about any forgiven debt there. Thank you guys for tuning into this week's video, short but sweet, to the point. If there are any questions that you still may have after watching this video, please leave them in the description below. We're always checking those, answering any questions you guys may have. Please leave a comment in the description below as well if there's any kind of videos that you would like to see from us next, some kind of real estate questions that have been on your mind that we haven't made a video about yet. Love to hear from you. Love to make a video about that. If you haven't already, hit that subscribe button, that notification bell, leave a like, greatly helps us out.